we're going to see the recession starting around mid this year. So June this year would be my guess at this point here, that we could see the recession set in. And from that moment, I mean, actually a couple of months before that, I would think that the stock market would be stock market top would be in the crypto market. So I think we'll have a very strong rally into April, something like that, maybe March, April, and then we should see a flattening thing, and then we should start to see the decline. And then
I'm expecting within the next 3 to 4 months something breaks. Let's assume it breaks by March, April. Then the first rate cut also happens in March, April. Quantitative tightening is stopped, and then you have quantitative easing following.
Well, I think first we go higher to the upper 4,000, 4,900, 4,950 or something like that. And then I think we break below the October lows of last year, which was 3,500. And I think we will then have a high in the first half of the year, probably in Q1, and then a low in summer.
What is going on YouTube? It's Brendan from Market Makers. Happy Monday, everybody. You guys saw in the intro, those of us that know, which includes this audience, knows what's coming. Q1, the end of Q1, March, April, key pivot point, the spring equinox. Heinrich Zieberg there to lead it off, talking about the market peaking in March or April. He believes the recession will happen by the summer. The recession looks a lot like the GFC recessionary cycle, which was about a 24-month lag from the yield curve inversion. And this summer will put us at 24 months from a July 2022 yield curve inversion, okay? And we look at the leading economic indicators, which have printed 20 months negative. We covered all of these topics in the videos last week. You look at the leading economic indicators, 20 months negative in a row, unprecedented. GFC was 26 months, again, takes you to the summer. Sri Kumar, who you guys may see on CNBC. His background is in Austrian economics, as in mine. We're talking about von Mises, we're talking about Hayek, we're talking about Milton Friedman, Thomas Sowell, an absolute American legend and treasure. He believes something will break in the market in the next 3 months. Again, lining up with the spring equinox. Spring equinox, key pivot point in the market. Went over this last week, been over it all last year. And of course, Felix Zulauf, who many of you have noted, literally has the same forecast as me down to the price targets. All through last year, I made plenty of videos telling you guys the market has never made a bottom once in market history prior to recession. Felix has the market going up to 4,900, 4,950, taking out the low. He calls it the year of the roller coaster. And then the Fed steps in, cuts rates to zero, pivots, eases, market reinflates. He thinks the final peak will be 2025, early 2026. Now, what do I think about that? Felix has the exact same targets as me. And I think he may have learned Fibonacci from the same Swiss-based instructor that I learned it from, because you guys know we have that exact same target. 4922 is the 1618. And as I've said, 5,000 would be that key psychological number, looking for that Q1 peak. The spring equinox, just a reminder, has provided incredible pivots in the marketplace and all of the bubble cycles, and then in other cycles as well, such as the pandemic, spring equinox, the bankruptcy cycles, spring equinox 2023, second largest bank failure. Go back to the GFC. First banks failed in the spring equinox. The bottom for the GFC was the spring equinox. The market peak in Y2K was the spring equinox, bottomed in the fall equinox. Key esoteric pivot points in the marketplace. And I'm happy to say this channel apparently is getting big enough that some of the big boys are starting to watch my videos. And then are they copying my videos, Lee? Is that what's happening? But you guys saw our video last week on solar cycles. And lo and behold, I've had a dozen people send me this clip from Gareth Soloway this morning. He just discovered solar cycles. Lee, run the clip.
And I found that very fascinating. It's very, very similar. I've been doing a lot, and again, I'm going to get into this more, guys. I'm just beginning my research, but I'm looking at solar cycles, and what's amazing about solar cycles, there's about an 11-year cycle, is that solar cycles, when you have peaks of solar cycles and the bare minimum, so basically the middle portion is almost like the safe zone. But when you have the minimal portion of the solar cycle, the lowest point and the highest point, there's actually it coincides with either major wars or pandemics or everything like, I mean, it's really remarkable. And I'm going to do more research and bring this to you guys, but just a little teaser there is.
Literally verbatim from my video. So if any of you guys watch Gareth Soloway, I know a lot of you do because I look at the YouTube analytics. We have a lot of cross viewers. Let him know I would be happy to come on his channel and talk about solar and lunar cycles, esoteric cycles, cardinal points in the marketplace because I've been trading this way for 20 years. Or you can just watch my videos and get the information a week or two early before the big boys decide to make videos about it. Guys, really do appreciate you watching and subscribing. Please do like this video, subscribe to the channel. It helps support us. We're going to go ahead and jump right into the charts and let me show you what I think is going to happen here in the near term future. Lee, let's start the show. All right, guys, we're going to start off with Bitcoin. Take a moment. If you do want to trade these markets, check out our fantastic sponsors, SimpleFX and BingX. Both of those links are in the video description. They will pay for your first month on our Discord. Fantastic community. We do live streams, TA, trading ideas, and really it's just a fun place to hang out. They'll pay for your first month. It costs you nothing. I'll pin Lee's contact information, his Telegram, and the YouTube comments. You can message him with any questions and any help you need to join. All right, guys, let's start off with Bitcoin. This is going to be a lot of fun this year. Look at the breakout is happening as I'm making this video. So we gave you this trade here on October 23rd, the fractal breakout from the diamond pattern. And right now it is up 42.8, almost 43%. The ETF news supposedly is going to drop by Wednesday, right? So let's look at this from a Fibonacci perspective to see what we've done here progress-wise. Throw down this fib, got above the 2618. So we know the next logical target, we need to go to our other chart, is going to be the drawdown or the Fibonacci retracement from the all-time high down to your market low. This gives you 48.5. Again, I expect 50K. ETF gets approved. I think you're going to 50K. Let me show you this a couple different ways. Looking at this from a fractal perspective, remember, fractals are nothing more than self-repeating patterns. This wave up was 105, almost 106% move. Let's take our next wave up and get a projection of where this would go. Market symmetry, harmonics here. This would go up 105% right there, 105.32. So when we look at that, that price target would be 49.7. Again, really close to the 50K level. I think that's what you're going to get here on Bitcoin. You can see price trying to wave up. Let me go ahead and look at the indicators on the 3-day chart. Still bullish, momentum still bullish. Let's go ahead and move this to a daily and get some daily price action. We look at this on the daily. Zoom this up some. Get rid of this wave. And you start looking at this. Again, we've been over these structures here, but let's just mini cough this structure in. We have our buying climax, green line. We have our base that formed, our automatic reaction. You can see your W pattern that formed inside here as well, right? So you have your W pattern that formed. We talked about this the last couple of videos. And now you have your move up. Again, this is a news-driven event. Be aware of that. If the ETF is not approved, a lot of this could come right back down. And the key support level you want to watch is 40,226 and then 36K. Okay. So if the ETF is approved, normally I would tell you guys, you people that watch my channel long enough, you know what this is supposed to do. In a normal asset, Bitcoin would break up above, retest the Wyckoff ceiling, and then spring out, right? The Livermore pivot. But Bitcoin will just do this. It will probably just shoot up in the air if the ETF gets approved based on that FOMO, right? So you just want to be aware of this. You have your higher low structure. You almost retested the low here, but you've been drifting upwards in this general direction. Again, the bias the market believes clearly is for approval. So 48.5, 50K, key psychological level when you get to 50K, for the price action. Let's look at the indicators here on the daily. See, on the daily, you got rid of this overbought condition, and now you're back in the bullish territory, just above the median line. Momentum's kind of flat, but tilting more towards the upside. So this will be fun to watch. And guys, where you want to break this, you need to break this fractal, just like the diamond pattern. You want to break that fractal of 45,905 here on the BingX chart, right? Break that fractal, and you can come up, take out 48,562. Let's see what happens when we get up there, because I think you're going to have this type of price movement. You're going to be building either a new higher accumulation base or a distribution top. And we're going to have to look at this in confluence with the other markets. Let's go ahead and bounce over to the S&P. Lunar cycles. We haven't done this chart in a while. A couple of key pivot points I want to show you guys, because we do have, from an esoteric perspective, again, the cardinal point in the market, spring equinox, total solar eclipse on April 8th. Our last eclipse, guys, look at this. Our last eclipse, October 30th, basically the Halloween, was your exact bottom for this rally up to the upside, okay? The exact bottom. And the last full moon gave you your market top for this move down. We'll look at these patterns on a clean chart, but here's your key lunar events that are upcoming now for the marketplace. We have the spring equinox on March 21st. So you want to be aware of these lunar events that occur and solar events around this date. You have a new moon just before that, March 11th, but really you have a full moon just after that, March 25th. And the key event, guys, obviously is the total solar eclipse. This is also going to happen in confluence. Watch my solar cycle video I did last week. This is going to happen in confluence with solar maximum. Again, it has marked key market tops in the marketplace during solar maximum events. We went over that list: 1929, Y2K. Key market tops have been there in past cycles. So watch this date. This is part of that Q1 prediction of running up into March, April, peaking out, and then selling off down into the summer, possibly the fall. Okay. So we're going to look at this on a clean chart on the S&P. Something I want to show you on the S&P, I mentioned Felix Zulauf has that prediction of 4,900, 4,950. And I said we have very similar, actually identical targets. And again, I learned my Fibonacci from Robert Fisher, who is Swiss-based, and Felix is in Switzerland. And they're probably close to the same age. But if you pull this Fibonacci retracement down here to the base, you have the target up here at 4922, right? And that's where I think we're going to get to 4922 to 5,000 by March or April. The question is not whether or not we get to this target. The question is, do we just start drifting higher now? Do we start grinding sideways? Or do we, as so many YouTubers believe, just crash down to like 4,100, 4,300? Well, you guys know last week I was predicting this, right? I told you, if you look at Fibonacci retracements and you pull it from the base, which is what so many people on YouTube do, this is a very basic Fibonacci concept, and it's a valid concept, but it's not advanced as far as esoteric wave theory, okay? So you look at this, and you would say your 382 is down at 4,500, your 618 is down at 4,370, so price would have to come down a lot. So you say, oh my God, we're going to crash because the 618 is way down here. That could still happen. We could be making a topping pattern, but for near-term price action, you have to understand how price moves. Price moves in waves. A key natural law pattern is 3 waves to a top, 3 waves to a bottom, okay? And if you look at this, here's your wave 1, this is your wave 2. We could be making that wave 3 up to that 4922, or we could be in a topping action here. Let me go ahead and zoom in on the S&P. Key market to track, guys. 62% of the investable income in the world flows into the U.S. market. Of that 62%, a third of it goes into 7 stocks. They're all in the S&P, okay? So this is a key market to track. But if we look at this from a 5-wave perspective, if we get a topping pattern out of this, here's your A, B, C, D, and this is your E. Is it going to make a lower high? It could. Is it going to make a higher high? And we're just going to grind sideways, maybe put in a W bottom. Let me put this up here around that 4,900 mark and do something like this, right? This could be our range. And knowing that this could be our range, I'm going to take a Fibonacci retracement for this leg, okay, this impulsive move. And this was actually hit. Remember last week I told you 46.50? You got the 46.73, and now you're bouncing back up because price moves in waves. And this is your impulsive move that you have to take out in order to retrace deeper. So really you have to get below 4550 or 4600 to have any shot at these lower downside targets. Till then, your topping action is going to be up in this range, and this is the range you will need to watch. So in this wave back up here on the daily time frame, we can pull a Fibonacci retracement. You look at your 618. Your 618 is at 4750 to 786 is at 4773. Those would be your lower high options. And if you look at your wave 5 here, your E wave, the 1618 from this perspective would be 4885. So you want to watch, and this may grind sideways. Remember, last week I was telling you, I think what the markets are doing, they're bullish. The mainstream media narrative all last year, at the end of last year for that 9-week rally was what? The Fed pivoted, which they did, and the Fed's going to cut rates. So you got a 9-week rally out of that. But now with the economy still seemingly to be strong, CPI predicted to go up this week when it comes out later this week, they're going to have to switch their narrative. And my prediction is they will switch that narrative. Their new sales pitch of the Ponzi machine is going to be, we don't need rate cuts. Look how strong the economy is. It's really a no landing. Look how strong the economy is. That will be their new sales pitch. But ultimately, the market is going to rally right into the recession, guys, just like in GFC. It's going to rally into the recession, that March, April peak. So the question for me is, do we make a lower high, which we will know if we break out above 4,800 or not? Okay, if we stall back at 4,800, could be making a 5-wave top, maybe going sideways for a bit, maybe dropping back down to 4650, and you may be chopping in here for a few weeks before you get that next move back up to the upside. Be very, very key to watch. So watch 4,800 as we chop around in here. If you get a lower high, watch 4750, 4773. But this is what I expected. Literally predicted this over a week ago now on the channel, that we're working off this overbought condition and we're holding a trading range for now. Could change, but that's what we're doing for now. Let's look at the NASDAQ. NASDAQ again, 2 ways to look at our Fibonacci retracements. We can take this from our peak to our base here, from that rally peak, and see that we got the 1618, this beautiful 12-13% retracement right off the 1618, got up to the 200% retracement back up there at 17K. And we can also grab this from this level that we have right here, looking at our 1618 at 17.1, and you can see the NASDAQ again, wave movements, guys. The market moves in 3 and 5 wave patterns. Those are the highest probability trades you can get. Right now, you're just looking at the beginning of a 3-wave pattern, wave up, wave down. Here's your beginning of your 3-wave, right? That would give you the classic double top. You could form a 5-wave pattern and then decline. This 5-wave pattern can go higher. So we want to watch. You have steps that you have to make, and all you did so far here on the 3-day time frame is put in your base for your 3-wave pattern. 17.1, still key resistance. We'll call it 17K is about where you got to. And if you look at this on the daily, it's going to look at the NASDAQ on the daily. You can see this even more clearly, right? So you have the NASDAQ on the daily. You have your wave 1 up. This is your wave 1, your 3 drives to a top. Wave 1 up, wave 2 consolidating. And within this, you can have this 5-wave pattern also form here. So you want to see what the market does here. And if we just start chopping sideways, watch 17.1, watch your base down here as well. Let me go ahead and pull a Fibonacci on this, get our base target, see where our support level is. Because again, most people pulling from the bottom of the rally and pulling upwards and saying, well, we haven't even got to the 382 yet at 15.8. Yeah, you may not get there. You have to look at this from the correct perspective of understanding wave movements. And your wave movements, you got to the 618, to the dollar, 16,191. 16,191. The low was 16,189.6. So on a $16,000 asset, you got within 50 cents if you understand where to pull the fibs from, okay? So now you're waving back up off the 618. Want to see if you make a lower high here, or if you can take out this range, right? So this is the whole key, is just be patient, wait and see what the market does as you form this trading range that you're in right now. The 618 at 16.2, just above it, 16.9. See what happens in this range. You're going to make some type of pattern, and that pattern may be sideways, slightly drifting lower or slightly higher until we have that move breakout going into the Q1 peak. Let's go ahead and look at the baby S&P. Same thing, guys. You can do the 5-wave pattern here. You can do it with A through E, or you can just use a 1 through 5. There's your 1, there's your 2, There's your 3 on the Dow. There's your 4 as of right now. Will the fifth wave be lower? Will the fifth wave be higher? Well, let's just say it comes in like a little bit lower, and you're making a 5-wave topping pattern for the moment. And it doesn't have to necessarily top. It can just top and chop, come up to 5, come back down, and eventually you will make a pattern. You'll make a W pattern to move for the upside, or you'll make a 3-wave pattern, a double top with a lower high potentially to move to the downside. Okay, so we want to watch what the markets do here. This rebound was expected, understanding price moving in waves. Key resistance 37.8 is your key resistance. And obviously your key support will be where you retraced from. Let me get rid of all this stuff. Key support down here. We're going to take it from this fractal low for this wave here. Your key support, you came down to 37,130. So you didn't even drift down there the second time. So as of right now, you're putting in a higher low here on the baby Dow or the baby S&P. Why do I keep saying that? So just something to watch, guys. Let's look at the indicators really quick. You are resetting your oscillator MFI in bearish territory, but clearly holding the price, momentum coming down the median line. So all good, all as expected. The Russell, Ponzi media loves the small caps right now, right? This is the catch-up trade. They all want to get that performance bonus again. So you have your wave up, wave 1, wave 2, looking for that wave 3. It's going to be a lower high, and then you could just retest your base, or in a bearish way, break it, right? Or you just start chopping around. So again, it's nothing more than a 3-wave pattern, and this is the basing piece of it, right? Need more time here, guys. But as we move towards that Q1 peak, I would expect 618, 2146 to be hit. Okay, so we may be chopping in the meantime. Let's put this on the daily so you can see us a little bit better. Maybe chopping in the meantime. We have our 3-wave pattern forming, may come back up, come back down. Maybe we make a W, then retest, and then fail and go sideways. But I expect us to come up to 2146 in confluence with the markets peaking out the end of Q1. Okay, that's the next level for the Russell. Everybody's bullish on the Russell. I expect more inflows into the Russell, but for right now, you can see in the daily, you're just trying to put in a base. That's all you're trying to do right now. So we'll see how this plays out on the Russell, but the Russell and Bitcoin peaked within 48 hours of each other in November 2021. So you did the same thing. You reset the oscillator from overbought, went into the bearish territory, and now you're trying to move back up for that next wave. Same with momentum. Same with the volatility momentum as well. Nothing new here, guys. All expected moves. Looking at the German market, right? The German market, you can see 16.9, been talking about this for weeks. This is your key resistance area, and you're doing the same move as the weekly time frame. Let's go look at this on the daily. You're doing the same move. All the same money flows in these markets. Remember, there's no such thing as smart money. That's a sales pitch from Wall Street. You're too stupid to trade or invest on your own. We're the smart money. All there is in this market is dumb money. There's big dumb money, meaning the people you see on TV, the money managers. And then there's small dumb money, meaning all of us, right? Because we all make mistakes. So this is where you're at in the DAX. You had your double top form and you sold back off, and now you're pushing back up. The DAX, the European markets, even though they're more advanced in the recessionary cycle, I would expect them to move up when the US markets make that final push, okay? And that's going to be the whole key, again, is watching the S&P, the largest market in the world. So you're at 16.7 right now. Your key resistance remains and has remained for many, many months, 16.9. So this is where you're at on the DAX. And again, we're going to make some type of pattern here, whether it's another lower high or a double top, or start to position ourselves for a volatility breakout to the upside. The oscillators have reset. You got back down in the bearish territory, angling back up. Same with momentum. Watch 16.9 and watch what happens. Looking at the French market, the Paris market, same thing, guys. You sold back off, 75.75. Key resistance, key support, 73.29. Let's call it 73.50. 73.50 is your key support. You're waving back up. Still very early from a daily perspective. So let's see what happens. I like to track everything as a daily as my golden baseline, okay? So let's see what happens when we come back up, because on a smaller time frame, a 5-hour or 3-hour, we're going to make a pattern, and perhaps we'll have a tradable move here very soon. Let's look at NVIDIA. We got our breakout. We've been tracking this here in Wyckoff, been talking about the 3-wave and 5-wave patterns. You have your 3-wave macro double top here that never broke down. You have your smaller double top that did break down, but called a shallow base, another three-wave pattern. But now you have your W pattern forming here. You see your W? So the whole market that I trade, as you guys know that watch this channel, is M and W patterns. That's where I take most of my trades off of, is this structure. So now that we have this structure, let's get some price targets since we broke out to the upside of Wyckoff. 1272 was 512. This looks like to me you're going to the 1618 at 523. So 523, let's see what happens when we get up in that range, see if we start making a top. But again, if the markets are basing for that last push up, you can start seeing some of the higher beta stocks, which obviously NVIDIA is one of them, start moving up ahead of time and or more aggressively. So this is a good one to watch, guys. MFI is flat, so you have room to move up here, and you have that beautiful W pattern. Let's see if we have any harmonic ratios here on our X5 for this pattern. Have almost 100% retracement there and a little bit deeper than a 50% retracement. And then obviously we have this expansion target of 1618, very close, just past 1272. So nice harmonic pattern if we get up to the 1618. But I'd be very careful because I want to see what the markets are doing. So I expect a little bit more upside here because we have not hit our targets just yet. Let's go ahead and look at Tesla. Tesla had this three waves to a low pattern, and we never got the third wave. We start to form the third wave, but if the markets start ticking up or holding a base, look for Tesla to reverse as well. We did symmetrical moves in the market, been covering this, 30% down drives, but the overarching pattern you could be making here is what? You could be making a reversal pattern, your W pattern, to go back to the upside, okay? So let's see. We don't know if this is the base here just yet, but just from this corrective high here, down to that low, you got just above the 618 at 259. You're holding at 234. So if this starts reversing, we could see this pull back up with the markets if you get a little bit more bullish sentiment here. Let's see how this goes. I have 283 would be my expansion target for this W pattern, right? So I'd see something like this that would form potentially on an X5 pattern here. If this is your low, we don't know if it's the low, but this would be the move I'd be looking at for this expansionary move. That would be your next level target, 283, if you can get above that. From a fractal perspective, you'd want to take out this top fractal here, the top dog for this corrective move at 299. So basically, you'd want to see Tesla get above 300 if the market does a nice rally here towards the end of Q1, pulling into a top of Q1, get on top of 300, and then pivot out. And that would be obviously a lot of upside from here at 240. But that's just the idea of the price moving, guys. Let's go ahead and look at gold. Gold, my ultimate upside target is 2225 based on this larger W pattern here that may have formed. Okay, this very large W pattern here that may have formed. And that would look something like this if I was going to highlight this, because a couple people were asking me about it. But that would look like this. I've just drawn it before. This is your W, right? So this is your big W upside move, something like that. And if we express that with an X5 tool, it would look like this. Just to give you a visual image here, almost 100% retracement once again from X to B. And then looking at this would give you this move here, which would be just past the 1272 on XD. And this would be your 1618 from B to D, right? That would be that move. However, a closer term, near-term target, let's zoom in on the dollar. Let's zoom in here on this. A closer near-term pattern movement here would be something like this. If gold wants to get a little bit more bullish, if this is the current low right now, which we don't know if it is, but 2132 would be this smaller W pattern that may be forming right now, which is this is your very tall peak, retracement. This would be your W back to the upside, watching 2132 in that range. And if gold will move with the markets, guys. So if you see the markets start to go sideways, and we may be in for some consolidation and some slight drifting up and down while we consolidate, moving towards that Q1, beginning of Q2 market peak. So just watch gold, key support level 2012, just below that 1969. If you can hold this upwards trend go sideways, I think you're going to be making that move up back to that 2100 level soon with the markets. All right, everybody. Hope you enjoyed the video. Leave me your comments, suggestions, commentary. Be happy to reply as always. Love to see you guys in the Discord if you decide to join. And yeah, I'll see you guys Thursday. Take care, everybody.